JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today's the 31st of March 2021. So yep, welcome everyone. Welcome to this last trading day of the month. But not the last trading day of this week, of course. But yeah, guys, as always, before we jump into the charts, let's quickly have a read through our risk disclaimer. So the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, I'll give you a few seconds to read the rest, and we can continue. Okay, so now then, also just before we jump into the charts, as always, quick mentioning of our JFD YouTube channel, which you can always subscribe to in order not to miss any of our upcoming videos. And of course, our JFD Bank website, and specifically our JFD research page, which we also update on a daily basis. So yep, feel free to visit us here on jfdbank.com and click on the research tab right there on the top, guys. So now then, jumping into the charts, the first one I want to pick up here is Nikkei 225. So the index did drift lower today. However, still remained above this upside support line drawn from the low of the 22nd of December. I'm going to keep an eye on this upside line for now. I mean, so far it seems to be doing the trick here, supporting the index, but still for me to get a little bit more excited with the upside, I would like to see that daily candle pushing above and staying above this 29,519 territory, somewhere around here, which is, as you can see, is acting as a nice area of resistance. Now, jumping into another index here, Hong Kong's Hang Seng. So previously I've looked at this one where the idea was that if we get a break of this upside support line taken from the low, the 25th of September, and then we see also a drop below this hurdle, the 28,326 territory right here, then it could have a chance of moving deeper here to the downside. Now my next target was the 27,040 territory here near the 200-day EMA, but didn't really quite reach that area. However, although yes, we saw the reversal here back to the upside, we can see that yes, the upside line got violated. So first of all, we can get rid of it now. Now what we can do here is we can stay with this downside line, because so far it seems to be doing the trick here, and it seems to be kind of providing that resistance. So if it continues doing that, then yes, we could go for some lower areas. But of course, if this gets broken, then yep, we could start looking at some higher levels. However, now in terms of the levels, what I would prefer here, and for the downside, for example, not only that I would like to see a drop below this 28,326 territory again, but also a drop below the 100-day EMA here, shown as the green line, and then yes, we could then maybe start considering lower areas. But again, for now, it's probably a little bit of a tricky situation here, a little bit of a difficult one, because at the same time it could drift lower here, could find support again near this hurdle, and then reverse and break this downside line. That's why my upside scenario here, and I do understand that maybe this is a little bit too conservative, but I would prefer to wait for a push above this barrier, the 29,550 territory right here, and then yes, higher levels could be met, guys. So for now, long story short, for the upside, if you want to aim for some higher levels, wait for a break of this downside line and a push above the 21-day EMA here, but still be very careful near this barrier, and that's the reason why I have this barrier as a more comfortable level after a break of which we could go for some higher level, for some higher areas. For the downside, not only a drop below the 28,326 territory here, which is needed, but also a good move below the this 100-day EMA, and then yes, we could go for that 200-day EMA maybe. Nasdaq 100. So the index is the index is drifting. Well, sorry, I wouldn't say drifting, but it's currently closed. But yesterday drifted slightly to the downside here. Again, this highlighted area did provide decent support. Yeah, I mean, for now, I mean, I would say that it's kind of a bit of a neutral situation here. On one hand, we do have this downside line which remains intact. On the other hand, we have ourselves this key support zone, which is kind of also providing a good hold-up. On one hand, you could say that maybe we're forming a possible kind of descending triangle here on the shorter time frame. Yes, it could be the case, but on the other hand, maybe this is just a slight pause here before another up move. So either way, guys, a break of certain levels is required first before we could, let's say, aim for the next kind of short-term directional move. So for the downside, it's pretty straightforward that we need to see a drop below the 12,758 territory right here. Maybe also we'll look at this 100-day EMA, but if you want to kind of strengthen the downside scenario, yes, a good drop below the 100-day EMA could do that. I think I've lost my screen here. I hope you can see me, guys. Right. Okay. Just bear with me one moment, guys. I think I've lost the screen here, and yeah, I mean, I hope it's back to normal. Let me just double check very quickly. Yes, sometimes that happens, unfortunately. Yes. So okay, now so I think it's all fine now, so hopefully we can continue. But coming back to this, so basically the situation here is like this, guys. I mean, if you want to go for some higher levels, well, you basically need to wait for a break, at least for a break of this downside line, and then kind of yes, higher levels could be met. But this 13,300 territory is kind of something that we are keeping a close eye on, because basically you can see that it showed that historic kind of a price action here shows that this is a very important barrier, and if this gets broken, then yes, we could go maybe towards that all-time high again. But if that fails again, then, well, I mean, we'll have to just reevaluate everything again from the beginning. But for now, from the shorter term perspective, like I said, if you want to go for some higher levels, wait for a break of this downside line at least. But then, yes, we could go for the upside here, but we'll be very careful, because there's a bunch of resistance areas and that could also play out. For the downside, wait for that drop below the 12,758 territory and below this 100-day EMA in order to get a little bit more excited with the downside. Yeah, I can see in the chat room, Klaus. Yes, you can hear me and see me. Okay, that's wonderful. Maybe this was just on my end something here. Now jumping into another index, and that's the German DAX. And look at this fantastic move here on the German DAX, and we have exploded to the upside yesterday. I've talked about this index, and basically, yeah, we've hit that psychological 15,000 territory, and we've managed to stay above that psychological 15,000 territory. However, looking at the cash index, we can see that the price right now is drifting. It's drifting back down a little bit here. I mean, it's currently sitting slightly below that psychological 15,000 mark, and in a way, I would say, if it struggles to bypass the yesterday's high here, which is the all-time high, which is around 15,029. Well, let's round it up here to 30. So if it struggles to bypass this barrier, I mean, I'm not really examining the upside anymore, because yes, again, it could go higher, but I mean, if the index struggles to overcome the previous high, then, well, I mean, we'll see that there could be a bit of a problem in the near term. Maybe the bears could start kicking in here. However, again, keep your eyes on the low of yesterday near the 14,890 territory. A nice good drop below this may kind of signal a bit of a corrective move here towards the downside, towards this upside support line taken from the low, the 26th of February. Another index here, but this is a dollar index, continues to rally nicely to the upside. And for now, I mean, we're just targeting the upside, and we managed to overcome this barrier here, the 93.21 zone, the one that I was mentioning yesterday. And what I said yesterday, that if it struggles to overcome it, then yes, we might see a bit of a corrective move here to the downside. However, if it nicely overcomes it and stays above it, the upside is still on the table. And we could target that 94.30 territory here, marked by the highest point of November. Now, don't get me wrong. I mean, for some of you might think that this is a bit too much, maybe. What you could do in that case is keep your eyes on this little hurdle, the high of the 5th of November here, and this is where what we are approaching right now. This area is near the 93.55 territory right here. Let's see how it behaves near this level. If it struggles, then maybe a bit of a corrective move here lower could be possible. But if it pushes further north, then yes, like I said, my next target is the highest point of November near the 94.30 territory. For the downside, now given that we shifted a little bit more to the right here, I would probably lift my downside scenario and put it from here, from the high of the 9th of March here near the 92.50 zone here, because at the same time we would have a break of this upside line, and lower levels could be met. Now jumping into gold, and gold is testing nicely this upside line, and now, I mean, we did have a break below it. However, the bulls managed to kind of lift the price back above this upside line. Now, again, the same kind of idea, the same story remains, that if this upside line continues to provide support, and this upside line is drawn from the low, the 20th of May of 2019, if it stays above, if the commodity stays above it, then yes, we might see a nice rebound and a push higher. But if we drop and we start seeing a strong move below the lowest point of June of last year here near the 1670-71 territory, roughly around here, if we see the daily candle remaining below it, well, guess what, guys? This will confirm a forthcoming lower low, and further declines could be possible, so keep that in mind. WTI oil quick update. To be honest, not much is happening here. However, I just wanted to give you a quick update on what's the kind of game plan here for me on this commodity, and basically the fact that it's still trading above this upside line, drawn from the low, the 20th of April of 2020, yes, kind of gives that positivity still. However, you can see that it's still struggling to overcome not only this little short-term tentative downside line, but also this 62 territory here. Now, previously I talked about the 63.80 zone, but the more we moved to the right here, probably you'll have to readjust this potential breakout level here and put it right there. So again, depending on how we're going to move here, and in the next few days, if we're going to move just sideways, then yep, this barrier could come in perfectly, and we could also break this downside line, push above the 62 territory. More buyers could join in here and drive this one higher. That's of course for the upside. For the downside, I'm still keeping an eye on the same level, the 57.28 zone, which I need to see a break off in order to kind of let's say target some lower areas, because a break below this area would confirm a forthcoming lower low, and more sellers could join in here, guys. So for now it's I do understand it could be a bit of a waiting game here, but well, yeah, we'd rather be safe than sorry. Ripple. So Ripple, haven't looked at this one for quite a while, but yeah, I mean, we've managed to break this downside line here, taken from the high of the 1st of February. So let's get rid of it, or actually let me recycle it, and let me draw this upside line here. No, no, that's not going to work here. Probably this is something a little bit more stable here, more touches, and the. However, either way, we're still above a few of these upside lines. So in a way, kind of, there is still a chance for this one to drift higher. However, as previously, when last time I spoke about Ripple, I talked about this 0.5810 territory, which so far is providing good resistance, and yeah, I mean, that's what I'm going to keep an eye on. And although we get these overshoots here, to be honest, I would like to see that daily candle staying above this area first, and then kind of we could go for some higher levels. But for now, yeah, for now it's a little bit tricky here. I mean, we're cautiously bullish on this one. Let's put it this way, because, like I said, confirmation break here is required. Ideally, the daily candle staying above this area. That's what could kind of bring in a bit more buyers here. For the downside, well, I mean, this is a little bit of a difficult one because. A break of this upside line, yes, of course, the shorter term one. Break of it might open the door towards lower areas. We could start aiming for this other upside line then. I mean, this could still be seen as part of a bit of a part of a larger correction here. So that's why, I mean, with the downside, ideally I would prefer to see it drop below the 200-day EMA. But I do understand that we could be missing out on a bit of territory here. So probably how you could look at this one is, if we start seeing a strong move below the 21-day EMA, then yes, this is where we could maybe start aiming for the downside. However, we definitely would need to have a stop loss, as always, guys. I mean, that's very important. And just in case this suddenly, let's say, drops lower below the 21-day EMA, but then let's say it starts reversing back above this, and like for example it did here on the 24th and 25th of March. In a way, it seemed that yes, we could go lower, but the next day it kind of reversed back to the upside and yeah, moved higher. So that's the same story here. We need to see it. We would need to have a tight stop loss here, just in case this, let's say, would reverse. If it wouldn't, then yep, you just captured yourself a fantastic moment here. And then yep, we could go for lower areas. Again, guys, you be the judge. You know yourselves better. This is just one of the ideas that could be possible here, but of course, either way, still the stop loss is required. AUD/USD. So, oh, by the way, before we go further with the pairs here, just a quick mentioning of some of the data that we received already, and basically we got the Chinese manufacturing PMI number for this morning during the early hours of the Asian morning. We got the number came out much better at 51.9 when the expectation was for 51 only. The previous number was at 50.6, so basically they managed to beat the previous and the forecast, so that's kind of great news. The same story with non-manufacturing PMIs from China as well. They managed to beat the previous number. The GDP figures from UK, so those came out much better. Well, I mean much better. So the year-on-year Q4 GDP figure, the previous one was sitting at minus 7.8. It came out at minus 7.3. So yeah, I mean, still in the minus, still in contraction, so kind of not really, let's say, yes, on one hand it's a positive, but on the other hand, still a problem persists. Now, the Q-on-Q figure did provide better results. It did came out at 1.3. The forecast was at 1%. However, the previous one, if you remember, the figure was at plus 16. So again, good numbers, but again at a slower kind of pace here. Something else to keep in mind today, the German unemployment change number, unemployment rate number. So yep, that is expected to come out at 6%. The CPIs of the Eurozone, the preliminary CPIs, that's what's going to be very interesting to see. Currently, the expectation is for an increase in inflation. Let's see if that happens. Then we have the from the US, we have the ADP non-farm payroll numbers. So that is expected to kind of increase drastically, going from 117K to 550K. Again, we'll see if that happens or not. But yeah, Canadian GDP numbers as well are in the on the watch, and those are expected to rise too. Now, coming here to this situation, AUD/USD is kind of pushing a little bit to the downside here. Now, although our kind of risk environment improved, and we are currently in kind of from the equity side, we are in the risk on environment. AUD here is AUD is drifting lower against the US dollar, but that's understandable because the dollar is pushing nicely to the upside. So here, for example, previously I said that we could be in this little nice falling channel pattern here. However, either way, if you want to go for the downside, we still would need to see a drop below this 0.7557 territory. A daily candle staying below this could do the trick for more sellers, so keep that in mind. For the upside, what I need here, I need to see, well, a break of this downside line here above the upper side of the falling channel, and then yep, a push maybe above the 0.7757 territory. But to be honest, I'll get to that point if we see a strong move towards this upper side of the falling channel. USD JPY quick update. So yep, we managed to reach that 110.75 territory right here. I talked about this yesterday, and yep, for now I'm still targeting the upside, and I would say that if we get a further move above this barrier, above this 110.75 territory, then my next target is the highest point of March here of last year, and that's near the 111.72 zone. If this barrier somehow, this 110.75, provides resistance, then we could see a drift lower. However, I would prefer to see a drop below the highest point of June 1st, which is roughly around the 109.85 territory, and then yes, target the downside. US dollar against the Turkish lira. So this is something that I've mentioned to you guys previously, and yep, we had a nice spike here yesterday. It pushed higher, came very close to testing this tentative downside resistance line taken from the high of the 6th of November. So for now, I'm going to keep an eye on it. So basically, we've accomplished the initial idea, and the initial idea was that if we get a push above the 8.05 territory here, my next target is the area near the 8.4770, something like that, near basically the current highest point of March. We've kind of managed to accomplish that, to be honest. Now the big question here is, can we overcome this tentative downside line? If we can, and we can push above this 8.4770 territory, yes, we'll go for some higher levels. But let's not forget that we have the all-time high, which is roughly around this 8.5827 zone, which we will be carefully monitoring. GBP CHF, not much has changed since yesterday, to be honest. I'm still watching that 1.2990 territory right here. I need a nice, good, strong break above this, a nice, good daily candle staying above this area in order to go for some higher levels. And finally, EURUSD. So this one is drifting further south, and yeah, I mean, for now, it's not looking good here. We could go further. My main target for now is the lowest point of November, nearly 1.1603, somewhere around here. But of course, don't forget that we could see maybe a slight little corrective move here higher. But if the pair struggles to overcome the downside line here taken from the high of the 25th of February, then yep, another slide could be possible. In order to consider the upside, well, push above the 200-day EMA here could bring the bulls back on the table. So guys, that's it for this session. That was a very quick overview. I hope you found it useful. Thank you very much for joining in and watching this one till the end. Thank you very much for your views, for your likes, for your comments, guys, really do. So if you want to catch my video later on, my Trader's Tea Time, as always, 12:30. Well, actually, I wouldn't say as always, but because we have changed the time recently. So 12:30 GMT time, guys. I hope you join me then, and yeah, have a wonderful day. Just to let you know, tomorrow there won't be any traders espresso nor tea time. So we'll resume on Friday. So, guys, thank you very much for joining in, and bye bye.